Hey, what's up everybody? Hopefully we get the video right this time. This is the third time I've attempted it today, but keep it getting interrupted. Let's see, it's Tuesday, November 15th, 12:14 p.m., so just after lunchtime. This is a pretty simple trade. So what we've got here is QCOM, and QCOM has a nice area of resistance right here just above 59. So we'll just call it 59. So you can see here, nice resistance at 59. And we have several touches at that 59 resistance level that have resulted in downside pressure. So sellers definitely step in at this 59 price point. Alternatively, down here we've got a nice area of support right at 50. And what you can see here, when we draw this line, we had quite a bit of noise right here when the market was going crazy, but for the most part, we have some nice buy-side interest right at this 50. Here's 1, 2. You can kind of count that. We've got a few bounces during this volatility off that 50 price point, and right here, and then most recently right here prior to earnings. And all in all, that makes for a really nice wide range. We're at the upper end of this range, so we're getting close to this resistance level. Very similar to what we're seeing here in QQQ. We're right towards the top of this range, at around 59 roughly in the Qs as well. So QCOM, looking for it to stay in this range going into the end of the year. One thing that is a bit alarming, we just had earnings, and it's not uncommon for stocks to kind of see some sideways price action after earnings, but this one is kind of setting up in a bit of a bullish manner. But we do have faith in this this nice strong resistance there at 59. We do want to give it a little bit of breathing room above that level though. So we've got what we think is a really good opportunity, a good strategy to take advantage of this situation, and that is a short strangle. So we're pulled up QCOM here. We're going on to December, so drop down December. You can see here we've got the singles showing, so let's drop down to Strangle. And we know we want 60 as our upper leg, so we're going to click on the sell side of this 60, 57, 50 Strangle. That's going to bring this up down here. So we're going to be selling the December 60 calls, but we want to take advantage of that range, and we want to sell the 50 put. So that's 120 credit right now. Let's go over here and analyze duplicate trade. And what you can see here, when we change the probability over to December 17th, and we set the slices to break even, you can see this gives us approximately 69% probability of success on this trade. Also, what it does is it gives us an upper break even of right about 61.20 and a lower break even right around 48.80. So if we look at this trade a little closer, so down here on the x-axis we've got the price of QCOM. Over here on the y-axis we've got our profit loss, and this zero line is the dotted white horizontal line. Above that we've got profits, below that we have losses. So of course this has no defined risk. We've got theoretically unlimited downside potential, or theoretically unlimited losses, I should say, and our gains are capped at that credit of $120 per spread. But on the flip side, we have a very strong probability of success. We've got 61.20 as our upper break even, 48.80 as our lower break even. Let's take those over to the chart. So 61.20 and 48.80. So bring out the oval tool. Let me delete all drawings. So 48.80, and we're going to look over here, December expiration, right around here. 48.80 is right in this general vicinity. And then 61.20 isn't even showing up on here. So we'll just kind of put it right here at the very top. So there's our break evens. Let's bring the range back. So we're looking at a range between around 59 and 50. And what you can see here, remember this upper break even is about a point above where it's actually circled. So we've got much more cushion than it shows there on the, actually about 2 points. So we got much more cushion than it shows there on the upside potential, and we've got a nice little cushion below this 50 psychological barrier / support level. So this is just a really nice high probability trade to throw in the mix, and hopefully we'll see some nice volatility and time decay here over the next few weeks, and we'll be able to pop out of this trade for a nice profit. So putting on just to reiterate, the QCOM short strangle, selling the December 11 60 calls, selling the December 11 50 put. Credit of $1.20 limit on this one. If you have any questions, feel free to email Nick at TickerTank.com. We'll be happy to answer.